The government numbers confirm this. Right? We're in a manufacturing recession. Right? They keep talking about a manufacturing renaissance. Yeah, they got the R right, except it's a recession instead of a renaissance. But if the economy or manufacturing is in a recession, how can you talk about a great economy when manufacturing is in recession? I mean, isn't that an important part of the economy, right? The stuff we make, and it's in a recession.
A new video by Schiff breaks down the complexities of the current economic landscape in a fun and engaging way. By deconstructing nuanced indicators that differ from mainstream narratives, he provides a distinctive perspective on the possibility of an ongoing recession. The analysis Schiff provides challenges traditional perspectives in a stimulating way. So, keep watching this informative video till the end.
All right, I'm going over the economic data points, and that somehow all the economists that I hear on the mainstream media were kind of talking about how great the economy is, and supposedly the data that came out this week confirms that the economy is good, when in actuality it kind of confirms the opposite, as bad as the data generally is. So we got the Richmond Fed Manufacturing Index, and that came out at negative 15 from negative 11 the prior month. In fact, this is the lowest it's been since the economy was shut down during COVID. I mean, so that's like as bad as the economy could be when like nobody's doing anything because everybody's been ordered to go home. And now in this great economy, this indicator is the weakest it's been since the economy was completely shut down. And even the service sector now, this portion, is back in contraction. But manufacturing has been in a recession for close to 2 years. Right? I mean, not even the government numbers confirm this. Right? We're in a manufacturing recession. Right? They keep talking about a manufacturing renaissance. Yeah, they got the R right, except it's a recession instead of a renaissance. But if the economy or manufacturing is in a recession, how can you talk about a great economy when manufacturing is in recession? I mean, isn't that an important part of the economy, right? The stuff we make, and it's in a recession. How healthy can the economy be when a vitally important part, the goods producing sector, has been in a recession for almost 2 years, right? So you just have to completely overlook the data point. And of course, it's probably worse than the statistics indicate, which is generally the case with these government statistics by design. Another weak data point that we got was durable goods. That was supposed to come out, this is December, at 1%, and it came out at 0. So that was a miss, although I think there were some other components. Ex-transportation, it was a little stronger than had been expected. But these are not, booming numbers that would indicate that, we're going to get a turnaround in manufacturing. Now, we did get the GDP numbers that came out, and this is what everybody was, pounding the table on. I mean, Biden is thrilled with the GDP number for the fourth quarter. This is the initial estimate. They're going to revise it, several times. But the consensus was for 2% growth. And there was a range, as there always is, around that number. The low end of the range was 1.3. The high end of the range was 2.5. We came out, or the number they reported was 3.3, right? Blows away the consensus forecast, way above the most optimistic forecast out there. And the personal consumption expenditures was 2.8%, which was hotter than the 2.5 they expected, but a little cooler than the 3.1 from the prior quarter. And the same thing with GDP. The GDP in Q3 was up 4.9%, right, which is another big number. And the fourth quarter was expected to be lower, and it was lower, but not nearly as much lower as expectations. So this is supposedly great news, right? This confirms how great the economy is, that the Fed pulled off the miracle, right? We got a soft landing. In fact, it's not even a soft landing. We never even landed. We didn't even get close to the ground. The plane started to descend, and then we just pulled right back up, and I don't even know if we even dropped the landing gear. That's how great this was, right? So everybody is celebrating at the Fed pulled off a miracle. We got rid of inflation and we never even had to hurt the economy, right? Everything is fine, right? We've dodged this bullet. We had the most reckless period of monetary policy in U.S. history. We had interest rates at zero for a dozen years, massive QE, and all it took was a few rate hikes back up to 5%, and that inflation genie is right back in the bottle, and it's never going to show its face again, and this is great, right? Well, first of all, this GDP number doesn't confirm that we have a good economy. All it confirms is that there was more spending in the economy, because that's really what's being measured: government spending, personal spending, and the big factors driving the GDP was the increase in government spending. Well, where's the government getting this money? It's borrowing it. That's not a recipe for economic growth. That's a recipe for disaster. The national debt, even if you look at the percentage that it's growing, and forgetting about the dollar amount, but the debt is growing much faster than the economy. So are we getting richer or are we getting poorer? You know, if you're just looking at your assets and not looking at your liabilities, you could think you're really rich. Yes, I grew my assets by $100,000. I'm $100,000 richer. Well, what if your liabilities grew by $200,000? You're $100,000 poorer, right? But if you just focus on one side of the balance sheet and you ignore what's going on the other side, you can pretend anything. That's what we're doing. We're looking at what did we grow the economy to? But we're not looking at all the money we had to borrow to get that growth. If we had to borrow $1 to get 10 cents worth of economic growth, was it really worth it? Was it worth going into debt? No. Did we borrow ourselves into riches? No, we didn't. We borrowed ourselves deeper into debt and poverty. Plus also, not only do we have more debt, right, to show for this small amount of supposed growth, but now we have to service that debt. We have to repay that debt with interest. So that diminishes economic growth in the future when we're burdened by the responsibility to repay and service this debt. So this is not real economic growth. Right? The economy is shrinking. We're covering it up with debt and spending, and we're looking at the result of that, which is this GDP number, and we're pretending everything is great. And again, another reason, too, that the GDP numbers go up is because we don't adjust them enough for the real rate of inflation. The deflator maybe captures half of the inflation, and that overstates economic growth. That's another reason the government likes to underreport inflation, is because every time they underreport inflation, they get a twofer. They tell the public that inflation is lower, which is good, but they also get to tell them that economic growth is higher, which is also good, right? So they lie about these numbers, and it's not like they just lie. The methodology for computing the numbers is a lie. So the numbers are designed not to be accurate. They're designed to understate inflation and overstate growth, and so they work the way they were designed to work. We got, the trade deficit again in goods, again, $88.5 billion deficit. I mean, these are huge numbers. I mean, it was slightly less huge than the $89.3 billion from the prior month, but these are gargantuan trade deficits. We are hemorrhaging red ink on a trade level. I mean, if we had a good economy, where is it in the trade numbers? Again, they try to tell us that because our economy is so strong, we run these big deficits. That's like a CEO of a company. Yeah, because our company is doing so great, that's why we're losing all this money. I mean, this is a measurement. Strong economies, wealthy economies generate trade surpluses. It's the basket case economies that can't produce enough for their own citizens, and they have to rely on what other countries produce, and they run a deficit, and they go broke. When America was the world's wealthiest creditor nation, right? Obviously, it's better to be the world's richest nation with the most assets than have the most liabilities, which we have now. But how did America become the world's wealthiest creditor nation, where the world owed us so much money and we were rich because we had all these assets, right? Because then we took the money we earned becoming a creditor nation and we bought up businesses and real estate all around the world. Americans were wealthy and they were accumulating assets. Now we're broke, accumulating liabilities. But where did we get all this money? By running trade surpluses. We kept running trade surpluses, and then we took our surpluses, and that was our profit. And then we were able to buy foreign assets, right, and become really rich because we produced our way to riches. We exported our way to riches, right? So now we've...
Schiff's unique perspective on the potential recession against the backdrop of conventional data challenges us to think critically about the forces at play. Your commitment to staying informed is key in navigating these complex economic waters. We appreciate your time spent with us today. If you've enjoyed the content and want to continue receiving expert analyses from Peter Schiff, remember to like, share, and subscribe. Your support keeps the conversation alive. Cheers to a future of continuous learning and informed decision-making.